Well, welcome to today's more important analysis videos on Thursday, 24th of January with me, Richard Perry, analyst at Hantec Markets. Looking across European markets today, we've got a fairly positive start actually on equities. Very interesting actually, considering you've got some really mixed signals coming out of the US over not only the China trade dispute, also you've got the government shutdown still in process, but add in the fact that the PMIs are a little bit disappointing somewhat today. The Eurozone PMIs have come out this morning and they are not looking especially healthy, falling to 50.7 on the Eurozone composite flash PMI, and that, according to market IHS, gives a run rate of around about quarterly growth of 0.1%, so not especially strong at all. How is the ECB going to respond to that is the question today. Liquidity has been falling, so there's prospect of an increase in the TLTRO or the LTROs today. That could happen, but how's Mario Draghi going to come out and how's he going to present? Because I think he's going to be a little bit cautious, somewhat to say the least, given the slowdown that we are seeing in Eurozone. We've got, as I said, fairly steady on markets today. Not a huge amount of movement on equities, but there has been a growing sense of dollar sort of stability as the euro has fallen away. Sterling's unwound a bit, had another little bit of a slip back yesterday, but that big breakout above 130 figure was a key move yesterday that we saw, but a slip back since that move. So 30 big figure is a big breakout point. It's interesting that that is being seen on cable, 30.40 at the moment. But look at how Treasury yields have just stumbled a bit in recent days. It suggests that the dollar is not especially strong in its own. It's if you see dollar strength coming through, it's generally tending to come on the back of other currency weakness. So that's pretty much what we've got set up for today. Gold a shade lower, but again still above 1276 for now, although 1276 is a key level near term you need to watch out for. Oil is actually sort of steady, actually rallied in the last sort of few minutes. It was about 0.5% lower, so mixed outlook on oil there. But it's interesting that we are seeing the dollar just sort of gaining ground as these other currencies have fallen back today. In terms of data points, we've got the ECB at 12:45 and the press conference at 1:30. Then you've got the US flash PMIs coming out at 3 o'clock. So, 2:45 actually on the flash PMIs for the US. And that will be interesting as well, because obviously you've seen general unwinding of PMIs data in recent months, and actually expected to sort of tick a slight bit higher on services and down a shade on manufacturing. So it'd be interesting to see how that impacts on the composite data. And then also we've got the EIA inventories at 4 o'clock. Crude stocks expected to again be in drawdown. Distillates a little bit of a drawdown, and gasoline slight build. Now my chart today is Euro Swissy. I've looked at Euro Swissy previously, and it actually rallied because I've sort of been playing around with this downtrend, but it's rallied to the pivot at 1350. But interestingly enough, this pivot again has kicked in the last week, and it seems as though that the rally's been used as a chance to sell. 60 again seems to be a limiting area on the RSI, and MACD line sort of rolling over under neutral, again on the brink of a stochastic sell signal. You've got this big negative candle that's formed today as the euro's sort of fallen over, and you can see that on the hourly chart where we've broken below 113 big figure as an initial sort of support breach, and you could argue that completes a little bit of a top pattern, gives you sort of 50 pips or so of downside, so that's back into the mid 1250s, back to these next sort of support areas from a week or so ago. But it certainly looks as though that reaction low could well now be tested again as these momentum indicators drop away. But the interesting point, as I said, is this pivot line at 1350, again the basis of resistance, and the market sort of falling over at that point there. So the rally just cannot get really get going at the moment in the last couple of months. Even though we had seen this recovery, it's just again seems to be falling over once more. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.